For every month that there is a lockdown and shutdown, the OECD estimates that major economies will shave roughly 2% off their annual GDP growth. The Secretary-General, Angel Gurria, frequently on this programme, says that high cost will save money in the long run. And the first priority, of course, is saving lives. James Sweeney's with me, the chief economist at Credit Suisse. He joins me now. We're obviously in a recession in one form or another. Do you agree that, that closing the whole thing down, even losing 2% of GDP, is better than an early opening with all its risks?
I think that you have to accept some trade-off between shutting the economy down and stopping this virus. I think it's much more important to stop the virus than to disrupt the economy. And I think what you're seeing from fiscal and monetary policy is really the use of war finance, wartime policy measures, in order to make sure the payments that people have can be made to the extent possible. And people get a little bit surprised that you can do this, but you can do this. So use that machinery which exists and focus on the healthcare crisis.
The risk, of course, is of something unknown. You may have heard me talking to Julia there. Something in a credit market, an obscure bond market, some form of credit default swaps. Are you hearing of spreads becoming dangerously unwound?
There has been a significant improvement. I mean, the vast array of monetary policy measures that have been done have been really helpful. I mean, most people, when they think about central banks, they think about interest rate changes, but the most important tool of the central bank is the ability to lend against assets or to buy assets in a crisis. And one thing that's really important that most people don't really understand is that they have a list. They have a list of what collateral they'll accept in exchange for money that they print or money that they lend out. And what happens in a crisis is they broaden that list of what they'll accept. And now you have investment-grade bonds and asset-backed securities and commercial paper. They've really expanded that risk, that list. Right. And that's very helpful. That backstops those markets. It doesn't solve every problem, but it does help.
So, James, as we go into the weekend with markets seesawing, what for you, rather than looking back at what the central banks have done, what for you is the next stage forward in the economic management of this crisis?
Well, I think you have to look at, what is the doubling time of the virus and how many places, do you have exponential growth continuing. In terms of policy measures, I think when you're doing unlimited quantitative easing, that's really the same as yield curve control when you're setting interest rates. It's yield curve control without an interest rate. It's without a target. But you're saying, look, we can buy as much as we want, and we have the firepower to buy as much as we want. So going from unlimited QE to yield curve control is sort of the next monetary policy step. And then on the fiscal side, well, you just got an enormous bill. I think if you had to have these shutdowns last more than another, say, 6 weeks, then maybe you'd have to do another bill. Because, again, it's about getting some money into the hands of firms and households so that they can pay their bills and survive.
James, have a good weekend. Let's talk to you next week, if we may, sir, to keep on top of and getting your perspective as this is developing.